Nike reported Q2 earnings yesterday after the bell, and initially shares of Nike spiked higher. And then the new CEO got on the conference call and started talking, and things didn't go as well. In fact, shares of Nike have reversed and are now lower heading into the regular trade. We'll look at this one technically along with the fundamentals as well. Talk about all of the different things that we saw in the Q2. More importantly, we got an outline of the vision from Elliott Hill, the new CEO over at Nike. And we'll talk about those types of things on today's video. We'll talk about the shift and the strategy shift that they're going to do it. Is it going to work over at Nike? And maybe more importantly, do you step in and buy a stock that is just currently about $5 to $6 higher than its 52-week low? Remember, in the stock market, you're trying to buy low and you're trying to sell high, and this one is close to a 52-week high. We'll talk about it, if it's worth it or not. What is going on, investors? Hopefully you guys are doing well out there. Now, before we get into things, a couple of announcements. Number one, as I have owned Nike shares for about 30 years. So there is nobody more biased to this company and more happy about the performance over the past 30 years of this stock than probably me. The dividend payouts alone from this stock cover the initial investment. So things are really good if you've owned this stock for a long time. But year to date, shares of Nike down about 30%, and you stretch this out to longer time frames, and it doesn't paint a glorious story. Now, it's fitting that Nike was one of the first stocks that I ever invested in. In fact, it is the first individual stock that I ever invested in. And it is also the last earnings video that we'll do here on the channel. Now, don't play the somber music yet. We will continue to cover the FANG Stock Recap Show, and we'll continue to cover the earnings of FANG. Also, potentially, if there's a game-changing type or groundbreaking type of earnings video, we'll post it here on the channel. But all of my earnings videos, including over 70 stocks, including Nike, Nvidia, McDonald's, Lululemon, Lowe's, Home Depot, Goldman Sachs, Bank of America, you name it. If it's a blue chip stock, we're going to cover it over on our new service launching sometime early next year. We're working on compliance, legal, all those types of things. Head on over in the description. There is a free newsletter. Sign up for that. You'll get an announcement of Blue Chip Stock Investor. You'll notice that this video is going to be kind of a trial run of that. The pacing will be a little bit slower. We won't feel rushed. Here on YouTube, you have to rush. You have to do a clickbait title. You have to get in and out of these things. I don't think that makes you a better investor. And if that's what you're here for, then I don't think you're going to be a great investor. If you want to be a great investor, you have to put in the time. If you can't wait through 20, 30 minutes analyzing a stock, then you should stick to ETFs or you should hire a financial advisor. If you want to do this stuff yourself, you actually have to put in the work. Now, Nike, speaking of putting in the work, company's got a lot of work to do. That is because the last executive over at this company, I was very critical here on the channel. People here on the comments of my videos, when I ask for these guys to get fired and I say they're doing a terrible job, people make fun of me. What you have to remember is the CEOs of these companies, number one, is they work for you. And number two, when they screw up, there is a lot of work that has to be done. And John Donahoe, the previous CEO of Nike, absolutely screwed this company up, at least in the longer term. They had some short-term gain over at Nike, but it led to a lot of long-term pain. And now Elliott Hill is going to have to come in here and clean up the mess. Is he the guy for the job? Talk about that on today's show. But in the context of the Q2 earnings, they came in 7.8% decline, but the bar was set incredibly low since they beat expectations by about $240 million. I think you had algo traders, potentially maybe a little bit of short interest in this, creating a little bit of squeeze after hours as this one soared. I mean, I think it was up 10% in the after hours, but a lot of it was probably programmable trading showing you got a massive beat, but again, on low expectations. That is probably the good thing going forward for Nike. If you're continuing to hold these shares or you just got into this one, the bar is set incredibly low. Okay. You've got 11% growth, 11% negative growth for the next 2 quarters. And as you move into next year, you start lapping these quarters where you had negative revenue growth. And it's still basically all of next year is expected to be negative growth for Nike. You're not expected to get back to like mid-singles digit growth until you get into like 2026, 2027. So the bar is set incredibly low. That's often really good for a company. And on the conference call, Elliott Hill laid out a turnaround plan. Now, he said entering the year, our digital platform, which is their website and stuff like that, and their mobile apps, they were delivering roughly a 50-50 split of full price to promotional sales. This is detail that you just almost never get from these companies. So he's basically saying 50% of orders that were coming through digital was full price and the other 50% was promotional. And I know this is just being a customer of Nike. I get on there, I see a $200 pair of shoes that I would absolutely buy, but then there's this $80 pair. And with a coupon code, I get it down to like $70. And I'm like, well, instead of spending $200 on these pair of Jordans that are really cool and I would love them, I might as well just pay $70 and save myself. And so Nike says the level of markdowns not only impacts our brand, but also disrupts the overall marketplace and the profitability of our partners. So what he's saying is when they drop the price on Nike.com, it means I might not walk into Dick's. I might not walk into, whatever shoe store is selling Nike shoes, Foot Locker. I might not walk into the store because I know I can get on Nike.com and use a coupon code and use Rakuten and save some money. This is really key with Nike. They're going to return Nike.com digital and the physical and premium destination, not their outlet stores. We'll talk about that in a minute, that lead the sports industry. They're going to return it to a full price offering. They'll elevate the consumer experience, blah, blah, blah. But being premium also means full price. It's exactly what they need to do over at Nike. Because you think about like the premium brands out there, Rolex. You ever think you're going to get a discount on Rolex? I mean, you can if you know what you're doing. You talk to the AD and you're getting one of the models that aren't selling well, you might be able to get a discount. But you walk into a Louis Vuitton store. Anytime on Louis Vuitton's website, I walk into a Louis Vuitton store. I'm not expecting to get a discount or to find anything on sale. In fact, I've never seen anything on sale over at Rolex or Louis Vuitton. That's where Nike is going to try to position itself, at least on digital direct. Now, they also talked about they've got these outlet stores. That's where they're going to unload their inventory. I think I've got a slide up here. So they've shifted their investments away from creating demand for our brand and capturing demand through performance marketing for our digital business. So what they said was they were running Instagram ads, they were running Facebook ads, Google ads to drive you to buy a specific pair of shoes. And that works, okay, when it's on sale and it kind of encourages, but you're spending a lot of money on ads and it's all performance driven. That was John Donahue. That's who he was. He was just kind of like spend $1 and make $1.50 kind of guy. He wasn't about brand building. He wasn't about any of that. He was a terrible CEO for a brand. Now, he's great for a company like eBay that just needs net sales. He's great for other companies, but he's not great for a brand that needs to curate its image. So they're going to get away from that. And you might see Nike ads out there, but it's not trying to sell you anything. Just like when I'm watching a golf event and a Rolex ad comes on, it's not trying to sell me a Rolex. Now they show a Rolex, they have Tiger Woods wearing it, they have, these famous golfers wearing the Rolexes, but it's not trying to sell me one. It's trying to create the image of wanting one. Now, the final action is we're going to prioritize is building back, earning the trust of our key wholesale partners. Now, here was a really interesting point in the conference call. He went on to name people by first and sometimes last name, but really a first name basis with people at Dick's, Regis, JD Sports, Foot Locker. So he mentioned people by name on the Nike conference call of partners that they're trying to get into. Because if you don't know what happened over at Nike, what they did was under, again, the previous CEO, they took away inventory from the Foot Lockers, from the different shoe outlets and the athletic stores out there. And what happened is, yes, Nike digital sales skyrocketed and their digital direct and their relationship with the customer direct skyrocketed. But at the same time, you let competitors like On and Hoka, they got shelf space. And now all of a sudden, those consumers that like to shop for shoes in a store, all of a sudden had less selection for Nike, and it allowed competition to flourish. So the company has a couple of pronged approach. I think most importantly is they are going to return to a full price model, at least when you're buying Nike Direct and you walk into one of these Nike flagship stores. Now, they are going to funnel inventory because there's always going to be inventory that doesn't sell or you get down to only a certain size range. That is going to get funneled into the outlet stores. Okay, that's where you can do that profitably. It's hard to sell a shirt 50% off on a website and then have to ship it FedEx and pay another $8 to $9 just to deliver it to the customer, but you can do it profitably inside of the store. They're going to do different advertising. I think Nike has completely failed over the last year. You had Caitlin Clark being one of the biggest stories in all of sports, certainly women's basketball. And I didn't see a single ad for her, a memorable ad. They should have had in it. They should have leaned into the fact that the league was trying to reject her. Other players were trying to reject her. They should have leaned into race with Caitlin Clark. They should have leaned into all of that, and they didn't. And I don't know if they're ready to do that over at Nike, but they need to start doing those types of things. And then the other things is they're going to reestablish relationships with the key partners. Now, you see the toll that it's taken on the business. Again, we talked about how you had sales decline by about 8%, although it wasn't as much as feared, but your gross margins continue to take a hit over this company. 44% last year, down to about 43%. They talked about on the conference call, they're going to have to spend more on marketing, and it's not going to be performance marketing, meaning you spend $1 on the click and you get $1.50 in sales. They're not going to do that. They're going to spend money elevating athletes and telling stories, and those might not lead to sales right away. But when you look at the great brands out there, especially the full price brands and the brands that can command a full price in almost any marketplace, Rolex is probably the best example. They don't do that. They don't do performance marketing over at Rolex. And I think that is absolutely fantastic. They continue to control their overhead expenses over at this company. As you have sales decline, you should do some cost cutting. And they did by about 5%. So overall, your total selling expenses down about 3% year over year. And so you flow down to your operating income is down about 26% from 1.9 down to 1.4. So you've got some work to do. Net income's $1.6 billion down to $1.1 billion. It basically paints the whole story. No matter how you look at this one, sales are down, expenses have been moderated, but your operating and your net income have declined over this company. So you do need a turnaround. But what is good over at this company is there's nothing to be overly concerned about from a balance sheet perspective. Inventory still sitting flat year over year. That's probably a good thing, although with negative sales. Again, if you want some cheap Nike stuff, I would say over the next quarter or two, you should get out there and buy some stuff because they're going to eliminate some dead inventory. They're going to clear through the channel, and then they're going to be charging full price for everything that they possibly can. But right now, they are sitting on a healthy amount of inventory, and we talked about how the next couple of quarters, you're going to have negative sales growth. That means they're going to have to continue to have some discounting over at Nike. Now, they've done a nice job. They took on some long-term debt. This was right before the pandemic, but they've paid that down and kind of whittled that down by about 11%. They continue to do dividends. They continue to do buybacks. In fact, on the earnings release, they talked about how they bought back $1.1 billion of shares. And under this buyback program, they bought about 13.1 million shares of an $18 billion program that the company has in place. And so with shares at a 52-week low, those buybacks tend to go a little bit further than they do when stocks are absolutely rallying. Now, when you look across the different regions, the two that matter the most are certainly North America. I don't want to throw out Europe, but really China as well. The company's bread and butter business, North American footwear, down 14% year over year. Again, some of that has to do with competition in the marketplace. Some of it also has to do with discounting as you're just not commanding that full price on that footwear. Same thing in China, down about 14% there. The rest of the regions across the board, you're seeing negative sales growth. Obviously, with negative sales growth, you've got EBITDA, or in this case, EBIT, which is essentially operating profit, down across the board, but still at levels that are healthy enough for the company to implement the plan that is put in place by the CEO, where they're going to go back to full price at the flagship and the online stores. So if you're a consumer of Nike and you're on the website and there's a $200 pair of shoes, you're going to buy that $200 pair of shoes and not do what I do and slip down to like the $80 ones because it's such a good deal. They're going to stop doing performance marketing where they're paying per click to drive a conversion. Instead, they're going to do more aspirational and storytelling marketing, which is the bread and butter over at Nike. And the more they do that, the more they can drive full price sales. And then they're going to re-engage all of their partners. And Elliott Hill is basically an expert of that. That is the division that he ran over at Nike before he left. and he's on a first name basis with all the major retailers around the world. All of that is a good thing. Now, also, what is probably a good thing as well is this stock has been channeling upward since the 1990s. And I bought into this stock somewhere back in 1997. I think it was like $5 to $6 to $7 per share. And here we are with Nike. We're at the bottom of the channel. Nothing about being at the bottom of the channel is scary for a lot of investors. But what I will tell you is when you're at the bottom of the channel, every investor out there will make an excuse not to buy. Back when you were actually the last time you touched the bottom of the channel at Nike was back during the great financial crisis. Trust me, I was trying to buy as many stocks as I could back in 08, 09, and everybody was telling me I was stupid. Well, I bought a bunch of stocks, and then 2 years later, I sold all those stocks. And I'm sitting in the house that I'm recording this video in right now. So I bought stocks in 09 and 2 years later had enough money to buy the house that I'm sitting in. And I'm not living in one of these flyover states. This is California, so it wasn't cheap. The other times you've touched the bottom of the channel was really during the .com crash. So here we are with Nike. You're getting only your third or fourth bite of the apple, which is the bottom of the channel with this one, over the past 30 or 40 years. There's going to be many of you that are going to get in the comments of the video and talk about how Nike is woke, talk about how this is not the right time, talk about how you got to wait for something. What are you waiting for as an investor? You have to ask yourself these questions. I think it's a great time to move in on this company. You've got a CEO that is not trying to patch a wound or do anything. He's ripping the Band-Aid off. He's going to get in there and do the hard work. Absolutely what he outlined was exactly what needs to happen at this company. I've studied brands from Louis Vuitton to Rolex to Audemars Piguet to Patek Philippe. This is what they do. Nike getting back to that. It will offend some consumers. It will turn off others. But those of you that can spend full price on sneakers will absolutely continue to do it. Nike shares have struggled over the past year, but from a technical perspective, you are getting this at a fantastic spot. And not only that, the expectations for this company are absolutely on the floor. For this company not to move over these expectations would be incredibly credible failure. And I just don't think this company will do it. Hopefully, guys, enjoyed today's video. Again, sign up for the newsletter down below. I'll have an announcement as we move just a couple of weeks from now into January for Blue Chip Stock Investor. That's where videos like these and a lot more will be coming in the new year. Hopefully, guys, enjoyed today's video. We'll see you again soon. Good luck with your investments.